guys, just a quick update on the portfolio. So we are still deep in the red. Minus $51. The portfolio value is $4,988. Today I am going to screen for new possible stocks that we can have on the short list. So this is the list as of now. So we have this stock here, Neste, that I will try to invest in. It hasn't gone exactly, it hasn't the right momentum yet, but soon I guess it will. Just now buy a small position there. And we have these other stocks. So Charter Communication still trending sideways. I need to see some upward momentum here. Slumberger has already gone away. I needed to trend down before I buy this now. Should have bought on Thursday the 15th, but I guess I was busy.
That seems crazy to me.
CJ Robinson World, yeah, this is also something that we were looking for now. So a huge gap down on February 1st. We need to see it trend upward again before we buy that. This one is starting to look promising. That's RBE. So if you have a new green candle that opens higher and is close to tomorrow, then I'll certainly buy this in DESA. Yeah, so it closed to 58. This I should actually buy. So I'm gonna buy this today. In DESA. And then we trade it. Let's go $20 on this one. All right. Okay, open at 16.99, $20. Maybe I should have bought 20 more. Depending on the price action, and I maybe buy more. Well, actually, I should have bought. I'll buy 20 more.
What the fuck is going on?
So Glencore, this is positive. They had earnings actually today. So they beat the earnings estimates, surprise on the upside. So that's good. So a huge peak down here, then it retraced back up. So it's just a little bit in the red, down about 0.5%. But this is definitely positive outlook for you. Look at this. This I would say is very bullish. So if you have a new day tomorrow where it opens higher and then today's closed, then we'll definitely buy it. Also, it has a bullish divergence on the RSI, so this is looking very promising. Now that earnings is already behind us, then we have 3 more months to at least try to close this gap, I guess. So I feel like the earnings potential here is roughly 10-12%. That's very good. But I'm now opening the screen in TradingView, and let's look at some stocks, guys. We'll look at the stocks 50, for example. Then I do my same filtering on the RSI. And here you can see that no stocks, they have already have a relatively positive momentum here, all the stocks. In the stocks 50, it's nothing more to look for at the moment. So let's look at the stocks 600. Just broaden up the scope there. Stocks 50, that's the 50 biggest companies in Europe. Stock 600 is the 600 biggest companies. So just gonna add all those with low RSI just to get a feel for it. This one we already have. RVE will have, what is this? So now I'm just showing you the method of how I screen for new potential investments. We have Orkla, we have is this DSB, Tbanks, Signify, Neste, yeah, we have it already. Then let's have a look at this as well. We have this Worldline. Yeah, I feel like we're getting close now. I have a maximum cap of 30 stocks that I can have in each list. So once it gets maxed here, then it will let us know. So Fortum, I think we already had a look at, but let's add it. Tracks to. Okay, so I feel like this is it because Glencore we already have. Immobiliaria. You can just have a look at it. Should we add it? Let me just see. So why is it trending so low? So we have to go back all the way to October 2014. If we just dismiss this period here back in October 2020, October seems to be a pretty bad month for this company. But anyway, it has had a huge sell-off since end of last year. So this stock has had a significant sell-off so far this year. So the percentages here, it's open up there and it's down roughly 22%. That's a huge move. Just have a look at the Fibonacci here. There, yeah, breached this level under the 61.8. Yeah, retested at 50%. Because it's pretty good at identifying significant levels. This Fibonacci retracements. It's astounding how accurate it sometimes is. So you can see we have a new. Now it's just trending in midway. I feel like it can just go up and down. I don't know, but I would have maybe potentially bought on this candle here, Friday 16th of February, because you can see it has pretty bullish, like a hammer patterns. That means the longer wick on the downside, so the price is getting pushed back up before it close. So that's relatively bullish price momentum. And it had a positive day and a new positive day. So if I had this on the radar, I would have bought these levels here. So yeah, just let's add this company as well. Let me see. Well, okay, so this is the last stock that we add to the list. So now we have a lot of stocks here, and then the next thing I do is that first of all, it needs to be tradable on eToro. If not, then I can't trade it. So that's the second move I do. I just see, okay, so this stock we have, and then Eden. Yep. What was this? TEMN. TEMN. Yep. NTGY. Yep. EDPR. EDPR. Nope. Nope. EDP. And I guess, no, it's not there. So it doesn't matter. I'll just delete that one. DSV. Yep. Fabric. Yep, it's there. Light. Signify. Yep. ECD. ECD. Yep. We need that word line. Yep. NDA. Yep. Break. Embracer. Yeah, Embracer we have. And then GFC. Wow, that's quite a ticker. Great financial crisis. Fortune. Yep. DRX. Drax. Yeah. Ana. Asiona. BKW. Brickworks. That's just 31.9. Nope. Nope. We don't have this one. And then the last one is Immobilia. What's that one? Immobiliaria. Yep. Okay. Checked. Then we have all the stocks. And then we can go to Morningstar. We need to have a look at the fundamentals just to see that we have the right setup. So, okay. So it has negative net income. That's not good. Healthy balance sheet. So you can see I had negative cash flows in 21 and 22. Barely got positive in 23, but the trailing 12 months now, then it trends down again. So no, this one is going out.
Get the fuck out of here, man. Leave me the fuck alone.
Let's look at Eden. Let's list it again. Okay, positive revenue and positive net income. That's good. Healthy balance sheet. and positive cash flow, free cash flow. This is very good. This is what I like. So this is definitely going into the bucket. So just see that we move this up and move on to the next one. Chinos. Let's look at the financials. Positive revenue, positive net income. Yeah, healthy balance sheet. By healthy, I mean that it is a good debt to asset ratio or low debt to asset ratio. So you can see that the debt to asset ratio is below 50% here. That's good. And it has positive free cash flow. Yeah, it doesn't have any numbers for 2023 yet, but if 22 and 21, for example, is an indication for how things will be, or if for 2023, then it should be a positive cash flow. I guess depending on the analyst expectations, then that will also be on the list. So for now, I'm moving it to the next phase. Energy Group. All right, let's look at the financials. Yeah, it's trending positive. Yeah, okay. Debt to asset ratio, and the cash flow is positive. Free cash flow is positive. All right, that's good. Yeah, so this is also approved for the final stage. DSB. Right. Yeah, this is not that good, I would say. It's decreasing a little bit the revenue. They have increasing debt to asset ratio because, or it's trending down. So they have they have free cash flow, but yeah, this is a little bit worrisome. But I still think since they have positive free cash flow, then just bring it to the next level to see what the analysts' expectations are. Very big. Okay, what's going on here? Net income is higher than revenue. Okay, debt asset is 40%. It's okay. Free cash flow is positive. It's approved. Then Signify. Possibly not growing. Increased debt to asset ratio. Have positive free cash flow. Yeah, so this is when the revenue and net income is not growing consistently, then I will most likely add a little bit less. Have lower conviction, but it is still the free cash flow is the most important. So yeah, I'll just bring it to the next round. Caves. Okay, this is good. Growing 60%. It's a lot. Cash flow is growing nicely. So right. Word line. Ooh. Yeah, that's negative. That's not good. But at least it became positive again in 22 and trailing 12 months. You can see it is it's also positive. So both the revenue, that's this one, and then the operating income and the net income is positive. So that's good. Balance sheet, the debt ratio is decreasing. That's good. And they have a stable positive free cash flow. So this is approved. Just can imagine this takes a little time to research new ideas, but what can we do? We need to have options to invest in. So, but this is obviously not something I do every day. So maybe once a week, maybe at maximum, I do this. And this is a more thorough search. Maybe I'll just do maybe 5 companies once in a while. Yeah, so for Arubis, it's not that positive on the income statement. See decreasing revenue and also decreasing net income. The balance sheet is very good, extremely strong. They have a very low, like less than 5% debt ratio. This is not good. So they have negative cash flows. So off you go. Sorry. Okay. Let's see, negative net income in 22. That's not good, but at least it's positive now. Yeah, okay, balance sheets, negative free cash flow. So, no. Sorry, we don't need to go there. Gefina. Oh, this is bad. Huge negative net income here.
What?
Balance sheets, increasing debt to asset, and it has positive free cash flow, but huge financing costs here. That's a little bit. I didn't really like this, so I think because of this net income here, then I will not. I'll eliminate GFC. Let me see, it's a Finnish company, I guess. Ooh, ooh. Oh, what the hell? Not looking promising. Increasing. Happened to the assets. They must have something must have happened to the assets. Okay, negative here. Huge negative. It is positive now, but I don't know. I didn't really think this was that promising. So because of this negative cash flow here, why would assets decrease that much? Don't really have time to delve into this. It's not that important, so you just stay safe, delete it, move on to the next one. Drax. Okay. Barely positive net income, at least growing revenues. That's good. Yeah, healthy balance sheet, decreasing cash flow. Yeah, but at least it grew a little bit now in 23. So yeah, improved. Afiona. Yeah, growing revenue, net income stays pretty much flat. Oh, actually, it's growing. Balance sheet is it's relatively healthy, but they have a negative cash flow, so that we don't like. Fortunately, Anna, you are bamboozled.
Very good. Very good. Tell me.
Okay. I don't know. Something is a little weird here. Relatively high. Positive. Reverse split. Okay. We bring this up. Okay. So the next step now is to go to eToro. And then you see that they have some analyst coverage. That's also a little bit important. Eden Red. Okay, so he has buy reiterated recently, beginning of February. 68. Ed Young from Morgan Stanley has a hold at 58, and the stock is now trading at 50. Okay, so both analysts they have before this incident here they had a little bit upside. Both analysts, the Morgan Stanley guy had 58, and then our dude he had 68. Our man, the analyst, the top dog. Yeah, so I guess we have to keep this. Temenos. Jimenos. What about you, man? Hold and a sell. Okay, reiterated, just a couple of days ago, so that's good. 80, 67, and then a sell at 58. Okay, so that was at 80 and 67. It's trading at 61 now, so it's a like upside here in that 2D. Okay, wow, sell. 25, 24, and 21. Oh, wow, they hit the nail there. But now it's they have hit their target, so I guess we can have a little go at it. Okay, so it closed at 23.02, open at, okay, so it opened lower, So we need to have a little bit more momentum here, but you can clearly see that it has bottomed out, it seems, and then it's now trending upwards. But of course, you can just have a little bit run and then fall harder towards the earnings. Difficult to say, but yeah, at least this we'll keep this on the radar. DSP. Okay, so this is a buy, huge upside. So that's it, guys. The reason why I just look at the analyst coverage is just to see where, like a ballpark, where do they think the intrinsic value is. And if you see a huge loss, for example, for some of the stocks, but still that's where maybe the most pessimistic analyst has his price targets, then it's kind of okay. But now I'm a little bit skeptical about the markets. To be honest, we need to be cautious. That's why maybe you have seen that I have open up positions way lower than $80 per trade. Sometimes it is 20, sometimes 40. Yeah, so probably 20 is the lowest I'll go. But I'll most likely going forward stay a little bit cautious. For now, I feel comfortable just adding a small position, just see how the price action develops, and then maybe add more, especially if it dips down. Then at least I feel a little bit better, not buying everything in one batch, just dollar cost average as the stock falls. So that's how the process is going forward, guys. So thank you very much, and catch you on the next one. Do you feel it in the air?